After a massive sell-off last week and a volatile session on a Friday, the benchmark stock indexes are determined to regain some losses. The market has a few reasons for optimism, including Nvidia's corporate report, which is due on a Wednesday. The economic calendar is empty, so investors are taking a breather. They are revising risks and they have an opportunity to buy high-tech stocks at bargain prices. Despite a plunge in the early New York session on a Friday, the major stock indexes recouped losses in the late trade. The Dow Jones inched up by 0.07%. The Nasdaq slipped by 0.2%, and the S&P500 closed almost flat at 4,369 points. The benchmark stock indexes traded higher in the New York pre-market. Futures on the stock indexes rose by 0.2 and 0.5%. The S&P 500 is expected to trade in the intraday corridor between 4,340 and 4,410 points. The S&P 500 closed almost flat on Friday, as growth in the consumer and energy sector offset weakness in the high-tech stocks. Alphabet shed 1.9% and Tesla lost 1.7%, as investors feared that interest rates could remain elevated for longer than expected. Nvidia shares dipped by 0.1% but still showed a weekly increase. At the same time, consumer goods and utility sectors went up, and the rise of Walmart helped the Dow Jones Industrial Average close in a positive territory. The S&P 500 energy companies index rose by 0.9%, while ExxonMobil added 1.5%. The fall in the shares of cryptocurrency companies was also considerable. Coinbase Global is down 3% and Riot Platform is down nearly 5.5% as Bitcoin hit a two-month low. Over the past 3 weeks, the Nasdaq has dropped by 7.2%, the biggest 3-week drop since the end of December. The S&P 500's 3-week 4.6% drop is the sharpest since March, and the volatility index reached its highest level in almost 3 months, reflecting the mounting anxiety of investors. The major indexes came under selling pressure because a series of strong economic data forced investors to abandon expectations of rate cuts, and this led to an increase in the U.S. Treasury yields. According to the FedWatch tool, the likelihood that the Fed will keep rates at current levels at the September meeting is almost 91%. Futures for the U.S. stock indexes rose on a Monday. Investors are looking for more interest rate tips from the upcoming Jackson Hole summit of Fed's policymakers, as well as Nvidia's quarterly report. The strong rally in equities this year amid signs of easing inflation was put to the test in August, with the S&P 500 down by more than 5% from its intraday high in late July. The 10-year yield rose to 4.28% on a Monday. A break above 4.338% would see the yield hit a level not recorded since 2007. There was a lot of pessimism in the market at the beginning of the year, and this shift from pessimism to optimism fueled the rally. Today, the situation is the opposite. Investors are anticipating the Fed's annual symposium in Jackson Hole later this week for more information on how long the central bank intends to keep rates at the current levels. Compared to the last year, the U.S. economy looks much better. The recession scenario is almost out of the question, but inflation is still sticky. In addition to the meeting of the central banks, the focus of attention this week will be on a Wednesday's August report on business activity in various countries. In July, a slowdown in the services sector led business activity in the United States to a 5-month low, while overall activity in the Eurozone contracted for the second month in a row. As for today, high-tech stocks have taken advantage of the relative calm to recover. On a Monday, growth campaigns such as Apple, Microsoft and Meta added 0.3 and 0.7%, while Tesla shares jumped by 3.05% in a pre-market trading. Nvidia, which sharply outperformed its mega-cap peers last week and gained nearly 6%, surged by 2% as HSBC raised its price target to $780, the second highest on Wall Street. The market will be able to evaluate the results of the chipmaker on Wednesday. In the currency market, the euro rebounded by 0.3%, thus putting pressure on the US dollar. Its index shed 0.2% before the opening bell to trade at 103.20. The intraday CAD is seen between 102.90 and 103.60. Following 5 weeks of gains, the US dollar index pulled back on a Monday. Last week, the index climbed by 0.7% against the euro and advanced against the yen. The People's Bank of China decreased the 1-year loan rate by 10 basis points and put the 5-year loan on hold. Economists had predicted a decrease by 15 basis points. The US dollar index remains not far away from 103.68, the 2-month high printed on Friday. Apart from the highly anticipated news on stimulus measures in China, the market is riveted to the symposium in Jackson Hole. Fed Chairman Jerome Powell is due to give a speech on Friday. An intraday recovery in oil prices helped the Canadian dollar gain ground. The USD CAD pair is trading at 1.3516, 0.2% lower. The instrument is likely to trade in the intraday CAD between 1.3480 and 1.3540. Oil prices went up on a Monday on the back of shrinking global supplies due to lower exports from Saudi Arabia and Russia, and this offsets fears of a growing global demand amid high interest rates. Brent crude futures climbed by 0.8% to trade at $85.50 a barrel, and WTI futures jumped by 1.1%. Last week, both benchmark rates snapped a 7-week winning streak and lost 2% for the week after the US dollar strengthened and China's real estate crisis heightened fears of a sluggish economic growth and oil demand. Despite economic woes, China is replenishing record inventories built earlier this year as refiners cut back on purchases. However, Saudi Arabia's shipments to China plummeted by 31% in July from June, and Russia, providing crude at bargain prices, remained China's largest supplier according to China's customs data. The crypto market is extending trends of the last week. Popular digital assets are still trading in the red. Bitcoin lost 1.1% intraday and again sank below $26,000 to $25,940. Top altcoins are trading lower in sync with the flagship crypto. Ethereum, Solana, Ripple, Cardano and Binance shed from 1% to 3.6%. Unfortunately, crypto optimists cannot find any encouraging news today. The fresh, unwelcome news is about a hacking terror, which turned into a crash of the website and wallets. In contrast, there is insider information that the US Securities and Exchange Commission can approve several Ethereum ETFs at once. As for the intraday outlook for Bitcoin, its position looks shaky. If the asset fails to recover from 25,900, it will extend its fall to 25,700 and $25,400. An alternative scenario looks like a recovery to $26,200 and $26,700. Keep close tabs on the financial markets on the InstaForex TV channel. Share your viewpoint and ask your questions, and see you online tomorrow.